Hello everyone, welcome to my channel. I am a swing investor. I will not consider the price changes of a stock 1 month later. This channel only makes short-term price predictions for stocks, usually 1 week to 3 weeks. Welcome to subscribe to this channel. PepsiCo is a stock in my tracking list. The stock has not performed very well recently. Last week, PepsiCo released its first quarter financial report, with mixed results and earnings below expectations, but its stock price did not fall further afterwards, which means that the stock may have bullish intervention. Let's first analyze the current position of the stock technically. In the past 5 trading days, the stock has consolidated in the low area. The fact that the stock price has not fallen further indicates that the stock may have bullish capital entering the market to take over the chips, but the current bullish power of the stock seems to be still weak, so the stock price still needs to consolidate at a low level. Judging from the price fluctuation trend of the stock this week, the cumulative funds outflowing from the market this week should be higher than the funds flowing into the market, but this did not lead to a further decline in the stock price. This shows that the chips sold in the market recently may have been eaten up by the bullish power. Let's take a look at the 30-minute chart of the stock in more detail. We can see that the stock price fell sharply on April 24th with a large trading volume. The next day, the stock price rebounded at $131.70 and generated a large number of transactions again, which is a signal that long capital has intervened in the stock. On April 29th, the stock rebounded again at $131.70, indicating that the market does not want the stock price to fall, and long funds have flowed into the stock again. In the past 2 trading days, the stock price seems to have been under certain selling pressure again, but the stock price has not fallen too much. However, the stock price may still adjust further downward in the future, but the bulls will most likely block the bears at $131.70 again. Let's take a look at the position distribution data of the stock. We can see that the current position profit rate of the stock is only 2.67%, which may be a signal that the stock price has entered the oversold area. In the past 5 days, the stock's position volume in the $131.70 to $136.10 area has increased significantly, and there should be long capital intervention here. But we also see that most of the current positions of the stock are distributed above $140. This means that if the stock price rebounds, the stock still has some room to rebound. But as mentioned earlier, the current bullish power of the stock still seems to be weak. If the market sell-off is severe, the stock may continue to consolidate at a low level, but the stock price is not expected to fall below the $131.70 level. Once the bulls get enough chips at a low level, the stock may rebound sharply, but the height of the first wave of rebound may be limited. Last Friday, PepsiCo released its first quarter 2025 financial report, with mixed results, earnings below expectations, and lowered its full-year earnings forecast. Dragged down by tariff uncertainty and cautious consumer spending, the beverage giant now expects its 2025 core earnings per share to fall 3%, compared with the previous forecast of a low single-digit increase. The company reported adjusted earnings per share of $1.48, slightly below the market consensus of $1.49, which is the first time the company's earnings have fallen short of expectations in at least 5 years. Meanwhile, revenue fell 1.8% year-on-year to $17.92 billion, but slightly higher than analysts' forecast of $17.77 billion. The company's net income for the first quarter was $1.83 billion, or $1.33 per share, down from $2.04 billion, or $1.48 per share, in the same period last year. Despite the concerns about the company's reported quarterly results, its recent stock performance suggests that the stock has already digested some of the negative impact of its quarterly earnings report, But Wall Street analysts' ratings on the stock are very positive. Wall Street analysts have a consensus rating of buy on PepsiCo stock, based on 6 buy and 9 hold ratings in the past 3 months. Analysts' average target price for the stock is $152.20, with a high of $175 and a low of $135, even higher than the current price. These are the call and put options for the stock expiring on May 9th. This is a set of volume distribution data calculated based on the strike price. It is obvious that the call options have a higher proportion. The strike price range of the part with the highest volume is between $135 and $138, which is higher than the current price. This set of data reflects that most investors believe that the stock will rebound in the short term. As mentioned earlier, the stock has a lot of resistance above $140. Based on the current market conditions, it may be difficult for the stock to rebound to $140, but I think the first wave of the stock rebound to the $138 level should be achievable. In conclusion, I think there may be profit opportunities in the short term, and $138 means that the stock has a potential upside of 3.3%. It doesn't seem like a lot, but the stock may still rise further after a limited pullback, and the target price may be above $140. Okay, guys, this is my price prediction for PepsiCo stock. Thank you for watching. If you agree with my analysis, please share and subscribe to my channel, and see you in the next video.